You have tuned in to Buy Now, Sell Now on ET Now. This is Mansi Dave, and with me is my colleague from Delhi studio, Kanishka Sarkar. And this is the show, viewers, where we help you navigate through all your stock market related queries. In a few moments from now, we'll start taking your queries on Buy Now, Sell Now. But before that, a quick market check. Of course, the markets opened on a weak footing due to escalating Middle East tension, but handled the situation with absolute maturity. But at present, if we see, again, the gains have been going down with around 24,844 mark on the Nifty. In the red signals, in no time, the index did both benchmarks as well as the broader markets show recovery. But again, the recovery is frizzling out. If we see rising crude oil prices impact economic stability across the globe, and crude-related sectors as well as crude-related counters and baskets are doing the talks these days. In the meantime, exchange ancillary major BSE is in focus today as SEBI has approved Tuesday expiry for NSE and Thursday expiry for BSE. Talking levels, Nifty did open with a slight gap of around 24,788, and as present, if we see, the levels are also on the same lines. Of course, the market and indices, both benchmarks as well as broader markets, did show signs of recovery. Right now, 24,841 is the level on Nifty. Talking about the mid-cap, the broader markets are also showing signs of negativity with around 200 points of downtrend in mid-cap index, 58,185 Nifty mid-cap to be precise. Major contributors, if we see in the large cap at present, Mahindra and Mahindra, Maruti, IndusInd Bank, Bharti Airtel, Axis Bank are few major contributors which are helping the markets at present with around 1.5 to 2% gains. And on the flip side, if you see, Infosys, TCS, Kotak Mahindra Bank, ICICI Bank and HDFC Bank are the players which are major laggards in the market today. Considering the sectoral approach, we clearly see that the IT sector is trying to help the market, but at present the auto as well as the banks and financials to some extent are showing signs of green. However, the gains in IT sector have frizzled out after a momentum of around 2 to 3 trading sessions. When the markets did open this morning, the IT sector as well as the real estate sector were performing. But right now, we see the gains going down in both the sectors, and we clearly see pharma, healthcare, diagnostic also not performing. Kanishka, good morning. The broader markets too are showing signs of negativity at present.
Very good morning, Mansi. That's right. That's how the market construct looks right now. But before we get started with all the queries there, let me tell you, we are in the middle of ET Now's 16th anniversary celebrations week. And on this special occasion, we are shedding some light on the big revolutionary changes we have witnessed in the past 16 odd years. And one such game changer has been UPI, or Unified Payment Interface. Now, India's UPI has recorded a whopping 17 billion transactions recently, and its success has been an inspiration to many other nations. Ankur Mishra is here with all that you need to know about UPI.
Yes, UPI is clearly a story of rising with India, and we can definitely call it a payment backbone of India. And why so? How big it is? 18.68 billion UPI transactions were recorded in May, and total transaction value has crossed 25 lakh crore. I repeat, the transaction value has crossed 25 lakh crore in the month of May. And how many live partners are there? 673 banks are live on UPI network. This includes payment service providers, which are around 90 in number, and rest including all the banking network and the partners where UPI network is live. Over 10 crore merchants are accepting UPI, and daily average transaction is 602 million transactions per day. That is the data which has come in from NPCI. And who all are using it? EMI, bills, IPO, tolls, donations, e-commerce, offline retail, and if I go on and on, the list will be very longer. But where did it originate? It did originate in the year 2016, and I tell you, in the first transaction which happened live, it failed. But after that, it has been a success story and got boosted post demonetization in November 2016, where the Bheem app was actually launched in January 2017. And of course, the entry of Google Pay, Phone Pay, Paytm, they changed the game, and thereon the transactions did pick up. Merchant QR code adoption surged after 2018, and interoperability and zero MDR is actually the formula for mass scale and trust, and why it has added to UPI's success story. Now, what next for UPI? We have seen that it has been live linked to Singapore, UAE, Bhutan, France, Mauritius and Cyprus too. And NRIs from 10 countries can use UPI on international numbers. And not only that, we have seen the launch of UPI Lite X, offline tap and pay feature via NFC. And more than that, the credit on UPI feature, how can you forget? Ever since that approval has come in from Reserve Bank of India, that has been used by the masses, and it has also got linked to ONDC, Aadhaar Stack, DigiLocker, and that is for next generation services which UPI can provide. But more importantly, NPCI International is a leading rollout of UPI, and we expect that this is going to go to different other countries because many of the countries are doing a case study on UPI.
Great story, Ankur, to start with, I should say. Thank you so much for that update. ET now soaring at 16 and we bring in such interesting updates and stories for you, and in the same line, UPI, India's payment backbone, UPI boom and the way ahead for you. Let's move ahead and let's start taking all the questions related to stock market which you have. A note to our viewers to connect with us on the WhatsApp number that are constantly flashing on the screen. Mention the name of the stock which you have along with the holding as well as the time horizon, the level at which you bought the stock, and you have the numbers constantly flashing on your screen. So do send in all your queries and we will ensure that we try all the queries and we help you get answers to all your queries. Let's welcome our guests for the day. We have D. Tokalingam, founder and head of research, economics research, along with us, and we also have Hemen Kapadia, technical associate, Dia Choksi, FinServ. Gentlemen, thank you so much for giving your time to ET Now. Hemen, I'll start with you. The markets are clearly showing a lot of signs of volatility. We clearly see a mature behavior for domestic market, but at the same time, the geopolitical tensions are the concerns which the market is constantly facing. What's your view right now?
Very good afternoon, very good morning to you, Mansi. Thank you for having me on the show. It's always a pleasure. Well, this is the 6th week of the market being range bound, Mansi. If you look at the chart, it's been a range roughly between 24,500 on the downside and 25,200 on the upside. And this is the 6th week. We've made multiple attempts at either side, Mansi, trying to break out about 25,200, trying to break down below 24,500. Neither has happened. Having said that, I mean, it seems more like a consolidation till it breaks 24,500. As of now, there are no signs of doing that. But if and when that goes, we might see a decent, if not a sharp decline. Having said that, the VIX, which was significantly higher, okay, it's still above 14, but it's off the highs and is below 15. So frankly speaking, the 3,350 point rise that we have seen in the Nifty from the bottom levels is being digested with a time and price retracement. But the time taken is more than the price. So I believe that is a good sign and the markets are consolidating for a move on the upside. But 25,200 needs to get taken out till that nothing happens. Then you're right. Till we don't break out of this range, I think there is no trending bias, Mansi. Markets will remain volatile despite the VIX being below 15, Mansi.
All right. Thank you, sir, for that view. Volatility likely to continue for the index. But with that, it's time to take a very short break on this edition of Buy Now, Sell Now. But we'll be right back answering all your stock-related queries, so don't go anywhere. Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Mansi Dave, a show where we are answering all your stock-related queries with our technical and fundamental experts. Now, Mr. Tokalingam, first query coming for you. It's on delivery, which is also in focus on the back of news flow. It's been gaining since the CCI has approved its plan to acquire a 99.5% stake in e-commerce. But we have a query coming from Jayesh, who has written to us from Hyderabad. He's a senior citizen. He'd bought 500 shares of delivery for the long term. His buy price is 400 rupees. So he wants to know if he should hold or exit.
I would give a sell call above 400 because it's a great company, started by a great management, but it is struggling on bottom line, to grow consistently. In logistic business, particularly the courier business, I would prefer Blue Dart to delivery.
400 is the level which you have to watch out for, and the viewers' acquisition price is also 400. However, you can consider exiting at that level. Of course, it's a good company, but at the same time, there are other players in the market also which one needs to consider. Coming to the next question, we have Bhagwan Bablani writing to us from Mumbai. Hemen, the question is on BSE, and yes, the stock which has been in talks today. Because of the news flows, of course, coming in from the exchange, and almost all the exchange ancillaries are in talk today. So he requires the information on BSE. He's holding 50 shares of BSE after bonus. Can he hold it for a year? Is it a good plan to hold it? And then after NSDL IPO, will it affect the price of BSE Limited? That's his question. Now, considering the news flow, big shift in India's derivative market has been seen. SEBI has approved a swap in expiry days where NSE will now settle F&O contracts on Tuesday while BSE moves to Thursday starting September 1. The question here is, brokerages see near-term pressure for BSE. Eamon, what's your view? Because exchanges say systems are ready and the transition will be smooth here.
Well, Mansi, frankly speaking, BSE has had a humongous move, fantastic appreciation. Technically, it's overbought. Okay, I think the price pressure that you're talking about is already visible on the charts. From 3,000 plus, we've already come to 2,500 in recovery. So the stock is a bit tired and stretched. So I would say if you're going to hold from a longer term point of view, yes. If you have a medium term point of view, you can book some profit, sell on bounce, wait for things to stabilize, because I believe it's run its course for the time being, and we could be around for a spot of consolidation. Mansi.
All right. Thank you, sir. Hemen, we have the next question coming for you. Now, the viewer Rohit Srivastav has written to us from Prayagraj. They hold shares of Magna or Dockshipbuilders, 900 shares at a buy price of 3,150. They can hold the stock for about 6 months. So they want to know if there's more upside. So should they hold or sell the stock?
Yeah, it's a hold. We are in a longer term uptrend. Yes, we've cooled off a bit. We've entered into intermediate correction. That's fine. There is support at 3,100, which it has taken. So 6 month time frame hold. For safety's sake, a stop loss at 3,100 or a delivery or a positional deeper stop loss at 2,900. I believe we should be back to 3,800 and more in the time frame that he has mentioned.
Okay, so that's the view coming in from Masgaon Dock, and at the same time, shipbuilding and defense are the players which are on the radar these days. And another question which we have is from Shankar. He has a view, and he would want a view from Mr. Chokalingam on GRSE, Garden Reach Shipbuilder, as well as Sterlite Technologies. Now, if we talk about Garden Reach Shipbuilder, shipbuilding space is another space which is in focus. Both technical as well as fundamental approach on the space is required. For the last 1 month, we have seen around a 27% up move in Garden Reach Shipbuilder. And when we talk about Sterlite Technologies, of course, the stock did see a 50% upsurge in the last 5 sessions due to the launch of the AI-driven data center solution, which the company is eyeing. Mr. Chokalingam, your view, a fundamental take on the shipbuilding space, and of course, we'll also take a technical view on the same.
Yeah, the shipbuilding space, the stocks have already played out in a very big way, phenomenal way. Garden Reach is a great company, but I personally do not have valuation comfort on the stock at current price. So I would give a sell call. As far as Sterlite Technology is concerned, before going into fundamental, I am little apprehensive of the stock, because if you look at the stock price movement from 2007, almost in majority of the years, the stock has fallen 40 to 60% even intra-year. Such a volatile, huge volatile stock in small cap space doesn't give me confidence. So I would skip, giving any firm one buy or hold. I would rather avoid this kind of extremely volatile small cap stocks.
News flows were the reason behind the upsurge which Sterlite Technology did see in the last 5 trading session. But Hemen, we would also need your technical view on Sterlite Technologies as well as Garden Reach Shipbuilders, because the viewer also has a short-term plan which he's thinking on.
Okay, GRSE, if it's a view from a shorter term point of view, Mansi, hold with stop loss of 2,900. Levels which he can book are around 3,500. We remain in a short-term, medium-term and long-term uptrend. So currently, yes, it is overbought, no doubt, but no signs of reversal yet. Yes, so the story stays on. Overbought, yes. So maybe the levels need to get respected. The other stock is Sterlite Technology. Uh, yes, it's shot through the roof, so to speak. Currently, once again, the stock is overbought. If it moves from 55 to 120 in just 2 months, I would say, and we are walking into a virtual roadblock at between 125 and 130. So time being, I think we need a cool off coming in. The volume seems to suggest some solid price action. But yeah, keeping in mind the quantum of the rise, I'd wait for a cool off before doing anything. And a small decline or a consolidation is around the corner.
Okay, that's a view coming in on Sterlite Tech. But sir, another question for you. There's a viewer who holds L&T shares at a price of 3,675 rupees. They want to know if they should average out. Their expected target was 4,000.
Yes, I think Larsen seems safely ensconced in a longer term move. Yes, currently though, we walked in a spot of bother because of a small rounding top at around 3,700. But long story short, it's a correction in an up move. 3860 seems to be on the horizon. Anything above that would need a weekly closing, but 3860 seems to be on the card, Kanisha.
60 is the level to watch out for. We have seen around 7 to 8% upsurge in the last 3 months for the stock. On this note, we slip into a short break, but when we come back, we'll continue with the questions. So stay tuned. Welcome back. You're watching Buy Now, Sell Now, a show where you get answers to all your stock-related queries. We have Mr. Chokalingam and Hemen Kapadia with us, helping us navigate through all your stock-related concerns. Taking the question from Dikshita, who writes to us, she has actually bought shares of Hindustan, Zinc, Gale, and also wants a view on metal stocks. Now, it's important one, Hemen, because you know what's happening with the entire metal tariff piece. Tariff hike is going to play out because India is not a major exporter of steel and aluminium to the US in any case, and that's the reason one of the days we see a shine in the metal pack as well. But considering all in all the scenarios, what's your view on the metal pack as well as the other stocks also which she has on the radar? She has bought Gale as well as Hindustan Zinc.
Okay, Mansi, I'll start with the easier answer, frankly speaking. Gale seems pretty properly placed. If you have a view for more than a year, ideally 1.5 to 2 years, I think Gale is a buy at current levels. I believe we are at around 187 now. There could be some near-term turbulence. The all-time high is around 245 or so. I believe a new high is in the offing probably the next year at the same time. Setup is good. Near-term turbulence. If you look at the Nifty Metal Index, Mansi, we have recovered and done well. Okay, it's obviously going to be volatile. Currently, we are in a short-term downtrend, but the bigger picture seems more positive than negative. So I would be cautiously optimistic on the metal stocks. I would be more stock specific, but yeah, things are not looking that bad. Coming back to Hindustan Zinc, okay, we've had a sharp up move and a sharp down move followed by that. We have support at around 450. I believe that should hold. The bigger picture remains positive, notwithstanding the current volatility, Mansi.
All right, thank you, sir. A cautiously optimistic stance on the metal pack. But moving on, Mr. Chokalingam, a question coming for you. A viewer, Thomas George, they've written from Cochin. They hold 100 shares each of Coforge and Persistent Systems. They want to sell any one of them now and switch the money to the other one. Which one should they sell?
Yeah, so both are quality stock, no doubt about it. One can, sell Coforge and maintain buy on or hold on Persistent. I believe Persistent is, better than Coforge at the current price levels.
So good stocks, and of course mid-cap IT players are also doing good these days, and Persistent and Coforge are one of the stocks which you have if you can keep it and keep the positions intact. Coming on to the next question, Akshay writes to us from Bengaluru. He has two questions which he has to ask. He's holding 150 shares of SBI Card from year 2020 with 25% profit. SBI Card is a stock which he has bought and he's gaining profit. He has not mentioned his entry levels, but as we see, 982 is the level at which SBI Card is trading at present, and in last 6 months the stock has seen an upsurge of around 43%. And another question which he has is on Divis Laboratories. He's holding 30 shares of Divis Laboratories at 3,000. The question is, should he book profit and move money to another CDMO player like Newland or Jubilant Pharmova? The question will be to you, Heymen. Yes, SBI Card, it's a long-term view which he has seen, and that's the reason he's getting profits. And Divis Laboratories, of course, Divis, in particular, laboratory healthcare diagnostic players are doing the work of defensive these days.
Mansi, SBI Cards, like you said, 43% appreciation. Despite that, setup is positive, and we've turned positive on the charts after almost 3.5 years of a downtrend. There is very strong resistance at around 1040, but I believe a further upside is in the offing. So I think clear hold on SBI Cards. Divis Lab has had a brilliant run up. I believe there is a little bit more upside, but after that, I think things would start getting technically stretched and overbought. So currently, I would say hold. There is some more upside to around 6850, 6900. I think that's where I think our investor can look to switch. I mean, you have a lot of stocks which look interesting. Maybe even a Biocon and Laurus Labs is one I would advise for a shift. Mansi.
All right, thank you, sir. A whole call coming on both SBI Card and Divis Labs. But Mr. Chokalingam, coming to you now. We have a query coming from Ramesh, who has written to us from Delhi. He recently bought 30 shares of Colgate at a price of 2,523. Now that the price is sliding, they want to know, should they hold or sell? They haven't actually given us a time frame.
Yeah, post correction, it looks attractive. Of course, in the short term, it may have a little more stress because oil price has bounced nearly 25% from 52-week low. It should impact, manufacturers like Colgate because of the hike in the input cost. However, I think it is largely in the price, and it is trading close to 52-week low. In the recent period, the performance also slightly better. I believe this is a good price to even enter the stock.
Okay, so current levels are a good entry opportunity if you are eyeing a consumption script in your portfolio, is what the view coming in from Mr. Chokalingam. Another query is coming, and Sri writes to us from Bengaluru. His question is on Bajaj Finance. He's holding 50 shares of Bajaj Finance at the price of 8,900. Considering the current scenario, and of course the stock has seen the adjustment to bonus and stock split, should he consider waiting or should he exit for the stock? The view is near term, Heymen.
Okay, Mansi, keeping in mind that it's a shorter term view, it's an exit. Longer term view, it's a clear hold. Shorter term, yes, overbought, stretched, negative divergence, crossover sell. There could be 5 technical reasons I would tell you why a short term decline is around the corner. Sell.
All right, sir, another query coming for you. Now we have a viewer, R. Sarvanan, who's written to us from Tamil Nadu. He wants to know your view on the index, that's Nifty 50. He wants to know when will it reach 25,000.
Okay. Well, I sort of covered this a bit in the opening of the show, Kanishka, but once again, 6 weeks, we are at 24,500 and 25,200. So coming back to a very near-term view of 25,000, it's not coming today. Maybe it happens on Friday, because currently when the intraday charts are suggesting little bit of weakness. Once again, no trend, 6 weeks of meandering aimlessly. Near-term pressure, bigger picture remains inconclusive. So not today, maybe Friday is when we could come closer to 25,000. Kanishka.
Okay, to our viewer, there's a lot of contingency in the market at present, and geopolitical risks, global concerns, and at the same time, the domestic triggers are also playing out. But yes, one can be optimistic and positive. Let's consider the views and the levels which you are watching and eyeing out for coming in this week itself. Coming on to the next question, we have a query from a viewer. Manoj writes to us from Mumbai, and he has bought IndusInd Bank. Now, Chokalingam sir, not just IndusInd Bank, but for banks and financials, I would want to consider your view. For the viewer, Manoj has bought 200 shares of IndusInd Bank at 950 is the level. From the level he has bought, the stock has tanked down to 839, so he is witnessing some losses. But if we talk about IndusInd Bank, we've got a recent report from Nomura which has upgraded the bank and raised the target to 1050 also. So for banks and financials, and in particular IndusInd Bank, what will be your view?
First on IndusInd Bank, if there is any recovery, I would sell it because you already have an example of S Bank which went through some governance issue, and the valuation multiple corrected from as high as 4.5 times to now around 1.5 times price to adjusted book value. Despite a lot of public sector banks, private banks taking stake, and even Japanese player entering the bank as a significant stakeholder, we are not able to see significant upgrade in the valuation multiple of S Bank. That is what I fear can happen to IndusInd Bank. So I would avoid cut my loss in case if there is a recovery. However, banking sector I am quite bullish. Yes, the banking sector is one of the few sectors to maintain double-digit credit growth. Of course, latest data point says that the credit growth has slipped down to 9%. And also, there is an expectation of some pressure on the NIM margin, net interest margin. However, still I am extremely bullish on banking stocks, particularly on the public sector banks. Most of the public sector banks have reduced the net NPA to less than 1%, around 0.5, 0.6%. And they are sitting on a very high low-cost deposit, CASA deposit. And also some of the banks have improved other income substantially compared to the core lending business income. The growth has been quite marvelous for other income, basically treasury operation and other fee-based businesses. So considering all that, I believe that the public sector bank would beat all the benchmark indices in the current fiscal year. So I am extremely bullish on public sector banks.
Okay, a bullish call coming on the public sector banks. But on to the next query then. Hemant sir, coming to you. Now, Shaurya has written to us from Gurugram. He has a question regarding United Spirits. He wants to know if it's a good time to enter for the next 6 months.
Good time to enter for the next 6 months. Stocks the stock doesn't seem very copacetic. Even the longer term charts seem to suggest weakness. So if you're planning a very short term buy and sell, maybe you want to do that, fine. But otherwise, no compelling reason, even on the longer term charts yet. We have walked into a correction of a greater degree, and I am not sure it's going to match in the time frame that is mentioned. So I would say avoid. If he wants a very short trade, then he can do that at the stop loss of 14.10, but it's more of a 1-2 week trade. The 6 month time frame doesn't augur well from the way the stock is placed.
6 month time frame doesn't warrant a whole position, but if it's a very short time frame, can consider still staying. But otherwise, overall, the view is avoid for the stock. Hemant sir, thank you so much for giving your time and helping our viewers get answers to their queries. Chokalingam sir, thank you so much for your time as well. Have a nice day to you, both of you. And on this note, we slip into a short break, but when we come back, there's an interesting research coming the other way. Stay tuned.